Good morning, Sense of Things audience. We're glad to have you guys here again. Once again, we've got some fun things to talk about. We'll also have some economic indicators that Ron's going to share with us and a little bit about the markets. Ron, how you doing, brother?
Good morning. No, good morning. I got a political season's heating up, so get your popcorn out or get your vomit bucket out. I'm not sure which one.
Vomit bucket or either that or your no-dos. So much has been made of this upcoming presidential debate. My theory is it's going to be because my theory is that one side, the president, is going to be not as exciting as everybody thinks he's going to be, and I think the former president is going to be muted. So I think it's going to be like watching slugs crawl across the ground. So,
well, my two thoughts are: number one, you're not going to learn anything.
nope.
Number two, they're not supposed to be exciting debates.
Yeah.
They're not supposed to be fireworks.
Yes.
You're supposed to learn. You're supposed to learn how would you handle this situation.
Yes.
What would your solution be? I go back to boring. Let's learn something. Not going to happen.
It's not going to happen. And once again, CNN has made such a big deal about this. I've seen
they got a countdown clock.
Yeah, countdown clocks, and all the Fox is going to have a simulcast and all this stuff, and it's going to be boring. So you're going to learn nothing, as Ron said, and it's just not going to be exciting. I've never watched a presidential debate because they bore the living tears out of me, and nothing is ever. It's just a bunch of gobbledygook in most cases.
Gobbledygook's a good word. Or maybe that's two words. I'm not sure.
You've got some fun stuff to talk about, I'm assuming.
I absolutely do.
All right. Let's see.
Here we go. All right. You see my screen?
I do.
Wizard of Oz, 1939 movie. The horse of the iconic horse of different color was used creating Jello.
Jello.
I didn't even know. I knew Jello has been around for a while. I didn't know it was back.
I didn't know it went all the way back to then.
Yeah.
That's crazy.
Yeah, so it was. They coated the horse with Jello crystal. But here's the funny thing: Buddy Ebsen was the original Tin Man.
Yep.
And they used to spray literally silver on him, so that to a point where he inhaled it into his lungs, got sick, and he was taken off the. He couldn't perform for the movie. And probably the last generation doesn't remember that story, but yeah. So you want to talk about back 1939, what they were trying to do for special effects and makeup.
Yeah. And didn't the Cowardly Lion, it was like it caused him all kinds of the stuff that they put on him or the glue that they put on him to get the stuff on. I think he broke out from that too. So these poor guys are like just getting destroyed.
And then of course, Judy Garland, who the hell knows how any of this affected her? She certainly went south pretty quick within a few years.
Did not last too long.
No. All right, next one. Burger King introduced wine in 1915. I was unaware of this. And then you read it, right? It was called the so-called Whopper wine. They were pairing wine with Whoppers, but it was only in Spain that they tried this out because they did some ridiculous marketing study that people in Spain loved wine with their meal. So in order to draw them into Burger King,
wow.
for dinner, they wanted to sample and pair a wine with your Whopper.
It's what goes well with a Whopper, what goes well with a whatever their version of a McFish is. I don't know. This goes with a good white Spanish wine. This goes with a good Tempranillo. And
I'm thinking of a Pinot Noir with my Oreo cookies tonight.
Well, that's probably true.
Maybe they're good for dunking.
But as we talked about in the previous podcast, the Oreos are smaller now, so you got to eat more of them.
Yeah, you just got to put your fingers a little further into the glass. That's all. And this was interesting because I was born about 18 years too late because all my favorite music was from 65 to 71.
Me too.
Led Zeppelin turned down Woodstock to avoid being typecast.
Typecast is what?
And here's the crazy thing. They'd only just formed as a band, I think, the year before.
Really?
Because remember, they came out of the Yardbirds.
Yeah.
So they were only out there for a year and they were afraid of being typecast.
Yeah, I'm like, this is the biggest stage nobody knew it was going to be as big as it was. It was some of the most are some of the biggest stars of their times.
Yeah, I thought it was fun and interesting, but
it's hilarious.
Ridiculous. Anyway, I got to go back. So our market has been at ridiculous levels, and you and I put together our forecast at the beginning of the year. I think this might have been in December, early January.
Yep.
And here we are. We're already well past all of it.
Yeah.
I still think we're going to end up in the 4,900 to 5,100 range. It all depends on how deep of a pothole we step in prior to the election. I believe we're going to be higher after the election, but I just cannot see, unless there's a clear winner going into the election. I'm talking about 5 to 6 or more points ahead. I can't see how the market won't get thrown around and get a pullback, which will be a great time to get back in to buy the dip. What are your thoughts?
Oh, no, I agree. And I could have never thought that it's as high as it is today. It's just been a ridiculous year. And it's one of those ones and I'm sure you feel the same way as a money manager. You're just like, okay, I just am waiting for the shoe to fall, and you have your hand on the trigger finger, or you have your trigger finger on the trigger. But I just, at this point, I'm like, I can't not be involved in this and be part of that ride, but we're just going to have to be fast about shifting gears if it decides to move the other way pretty quick. And I don't know what the trigger is.
Here's the conundrum. I have people that are 1 to 3 years away from retirement.
Yep.
So as you get closer to retirement, you de-risk. But then they're saying, I'm also missing some of the upside here.
Yeah.
And the whole thing is like, we don't know. We're going to wake up tomorrow and another October 7th will happen.
Yep.
Who knows? I'm not wishing for any of that. But the whole goal is to be a risk manager. And the idea is, okay, you're missing some of the upside, but we get a 5 or 10% pullback in the next 2 months, you're protected.
Yeah.
Right? You're either you're protected or you're not going to see that much of a pullback. It's definitely a conundrum, and had some tough conversations with clients, but many of them are just scared crapless about what's going on out there, and they have been for 12 to 18 months.
Yeah. Yeah. Once again, I just don't know what the answer is. The answer for me is I watch this like a hawk every day, and it just keeps rolling. We had that minor little pullback throughout April and early May, pullback towards the end of May, but it's off to the races again here in June, and we're going into the summer months, which it's anybody's game. You know, the volume goes down, so the magnitude can be up or down either direction. And if the volume's down and all of a sudden the sentiment slides to we're concerned about the market, it's anybody's game on what can happen during that time period. So we just have to be prepared. And we're getting pretty far away from the 50-day moving average at this point. So I think there's that chance of seeing things work their way downward again during the summer months.
Absolutely. Absolutely. So I got 2 economic indicators. One we covered in our last podcast, which was the PCE. And this isn't just going back 5, 10, or 15 years, or even to the .com. This is going back 45, 46 years. And we've never seen the depth of the negativity with the 10-year yield and the 3-month. This is a lot of, look, we've talked about the 2 and 10, the 2-year being higher than the 10-year. The Fed looks at the 3-month over the 10-year. And everybody talks about the consumer and the spending and everything else, but realistically, credit conditions have tightened.
Yep.
So unless we get some type of a flush out or a reset, so the Fed rate could come down 50% in the next 18 to 24 months, I don't see where the next bull push in the economy is going to be, because what they say, 60, 70% of the profits of the entire S&P 500 is from 5 or 6 stocks.
Yeah.
So how are we going to get that next push up if it's not going to be broad-based? And I think a lot of it has to do with the interest rates and the credit tightening.
Yeah, it's just those few companies, I think largely because of AI, they're major players in the AI world right now. So they have some AI component, and that's what just keeps pushing them. So people just put aside logic and they just look at, this is the next push in the economy. But yeah, it's not been broad-based, and it really has not been broad-based for the last 2 or 3 years. And there's 1 or 2 ways that can happen. It could be that those now probably 5 stocks pull back and they become less important, and that money scatters out a little bit more to the broad base, or they're the last ones to fall and it pulls the market down. So I don't know what the answer to that is. I think the most important thing is keeping an eye on it and making sure that you risk manage however you risk manage, whether it's through asset allocation, whether it's through trading, whatever it is. You want to be aware of that, and you want to be able to make those adjustments when you need to.
Yep. So now we got to follow the most important indicator. It's not the underwear indicator.
Damn it.
It's the lipstick recession indicator.
Oh, Jesus.
So this is monitoring sentiment in lipstick sales.
Okay.
And right now, it's almost like sentiment from excellent, good, only fair to poor.
Okay.
And things are trending down.
Okay.
So lipstick sales are down.
So,
I have no idea what this means or why this means this, but I understand the underwear sales. The lipstick sales, I'm not sure as far as an indicator.
Yeah, guys don't replace underwear that often, but women have to replace lipstick.
Hopefully they're washing it.
Yeah, that's true. And hopefully if you're going to donate it, you washed it before you donated it. But
you throw those skivvies out. That's what you do. All right. So then we have an investment idea. I thought this was interesting. Solar's been around forever, certainly in the last 15 to 20 years. It's certainly grown. I know you were involved in a solar industry, solar business for a while. And I thought this was interesting because in a correlation with AI and data warehouse power, I think you're going to see a lot more of these data centers, if they don't have them already, having a complete bank of solar panels on their roofs and their property to just help combat the skyrocketing price of power and utilities. And I will say this, I'm talking industry specific. I could not tell you what a solar company would be a winner here. I have no idea. Maybe you have a better idea.
No, and
buy an ETF maybe.
Yeah, I mean, the funny part is, and I was actually just going through this as an investment theme, did some research, and I'm like, I can't find a one that makes me excited. At this point, they've all been on this kind of gradual downtrend, and I've not seen anything. The problem with solar companies is they rely so much on subsidies.
Yes.
And subsidies are that you just don't have any control over it in the solar business. Yeah, you get subsidies in the form of a tax credit for an individual and for businesses, but that only lives for 1 year. And you're going and going, and they can change the subsidies. Those can go down over time. There's just an immense amount of changes that happen. And that's really the only reason solar gets sold in a lot of cases. Now, I will tell you, I added solar to my home. The good part is we're going into the hot months of the year, and I know exactly what my bill is going to be every month. It will go up slightly because we just can't produce enough power on my roof. I could add double the solar panels, and in peak times of usage, we just can't keep up, and it drains the battery down, and it's pulling from the grid at that point. But my bill will not be over $150 during the summer.
Wow, I'm surprised it was even that high.
Then I have my solar bill, which is consistent every single month. So when everybody's talked about this increase in electric costs and all that, electric costs over the last 3 years are up 25%, and they're getting higher this summer. I know pretty much I'm going to be in a pretty tight range when it comes to that. So that was the reason I did it. I didn't do it as a mathematical calculation of when it would get paid back and all that. I did it as, you know what, I want to be able to know that I'm going to be consistent from that perspective.
And the problem is the cost of making solar panels, the materials are still so expensive.
Yep.
And I was going to bring up subsidies if you didn't bring it up, because without those subsidies, it's a lot tougher to justify the cost.
Yeah, it was funny because my dad was involved in the solar industry in the 70s. And that's what killed the solar industry in the 70s. They were massively subsidizing all this. And then all of a sudden they shut that down, and boom, the solar industry went away, and it really didn't come back again for another 30 to 40, about 30 years. It started coming back.
And even today, I could have said it 20 years ago, the price has got to get cut half.
Yep.
When we live in two states where The sun is out most of the year and it's
Yep.
pretty hot. But if they could cut it in half without subsidies, I think you could see, I don't know what percentage of houses have it or apartment complexes, whatever, but it should approach 50% if it makes it worthwhile. I don't know what that does for margins and if you can attract the right talent, but at some point we'll get there. At some point we'll get there. But I just thought that was interesting.
Well, I think it's a partial solution, but it's not the people that are all about the planet and everything else. The only solution is solar and wind. And I drove through West Texas, god awful, ugly country to begin with, and it's now even uglier with all these windmills out there. And the funny thing is, we're going through there and it's 20, 25 mile per hour winds. It was a somewhat windy day, and half of them are shut down because they can't run them when you get upwards of 30 mile per hour winds. So it's, what's the point?
I don't understand that, because I actually sat on a plane with a guy that was very big in the wind turbine industry. And he said, in order to make a windmill worthwhile, there has to be at least an 8 or a 9 mile an hour per wind. You'd figure 30, you'd have plenty of energy being generated there.
There's a limit to how fast they can turn at that point. And so then it puts a lot of stress on them. So they only turn at a certain amount of revolutions per minute, and just jamming more wind in there doesn't help. So then they end up shutting part of them down. And it's okay. All right. So you've put multi-billions of dollars into these things. And just because it's windy, it's the West Texas plains. It's flat as a friggin' pancake. And there's always wind out there. And okay, how often are these things shut down? What's the deal with it? It's insane. And God forbid, they are just the most ugly things I've ever seen. So I just can't even imagine it. And especially the ones offshore, you're sitting there at the beach watching these stupid things twisting off the beach. And still, they're only producing about 15% of our power in Texas.
Yeah.
And there are tons of the damn things.
I got you.
So until next time, thanks, folks. We appreciate you guys coming on. Hopefully this was something you learned, and we'll continue to do stuff like this for you. We will see you back here the very next time.